What's up everyone, it's Caddy with MoneyVest. So in today's video, we're going to be going over the entire market update, of course, and we do have the unemployment numbers coming out tomorrow at around 8:30 a.m. Eastern, and I will be live to cover those numbers, as well as ECB, European Central Bank, coming in with the first rate cut in over 5 years, so the first time in since 2019. So got lots to discuss here in today's video. As always, if you enjoyed, find it helpful, make sure that you drop a like, and of course, don't forget to subscribe to the channel if you're just joining us for the first time. And again, links to our Discord and Patreon is going to be down below. There is currently a 51% discount if you want to take advantage of the MoneyVest beta launch that we're going to be happening in the first week of June. So link's going to be down below, and you can lock in this pricing forever. So that's a 51% off plus an additional 16% discount that you can avail on an annual basis, and you'll have access to the entire platform where you can look at income statement, balance sheet, cash flows, analyst estimates, ratios, including calculators related to discounted cash flow and discounted earnings multiple models, and as well as our MoneyVest metrics, where you can look at a trend analysis over time for, of course, 3, 5, 7, and 10 years as well. So again, we'll love to get you on board here. So link's going to be down below if you're interested in joining, and let me know if you have any questions whatsoever. So moving over to the market. So IMF says ECB rate cut appropriate, Fed should stay cautious, and again, the International Monetary Fund said on Thursday the European Central Bank's rate cut is appropriate given declining inflation in the euro area, but that both ECB and Federal Reserve policymakers should maintain a data-dependent approach as well. The interesting thing is that they actually cut interest rates, but they've increased their forecast for inflation. So they're increasing their forecast for inflation, meaning that they are expecting now inflation to be slightly higher on a 2024-2025 basis, and yet they reduced interest rates by 25 basis points. So ECB on Thursday cut interest rates for the first time in 5 years, joining the central banks of Canada, Sweden, and Switzerland in starting to unwind some of the steepest rate hikes used to tame the post-pandemic inflation surge, but it kept investors in the dark about its next move as well. And like in the US, we have seen a significant progress in reducing inflation in Europe, and we assess that ECB policy is appropriate, and but it's also important for the ECB to maintain its data-dependent approach and its meeting-by-meeting approach. And Kozak said that the U.S. economy has proven remarkably resilient in the face of tight monetary policy and economic shocks, with strong domestic demand despite slower first quarter GDP data as well. So inflation data for the first quarter has been overall higher than we would like to see in the US, and it's a reminder there are going to be bumps on the road as the US strives to bring inflation back to target as well. And this also reinforces the need for the Federal Reserve to be cautious and be more data dependent on deciding policy in the coming months as well. A 10% stock market correction could unfold over the summer, and this was from JP Morgan as well. So a 10% sell-off in the stock market is possible this summer after a massive year-to-date rally. According to their trading desk, they said the markets could test the 5,000 level as support and potentially fall below with a decline as much as 10%, and that would put the S&P at around 4,800 as well. And some of the reasons are buyers' exhaustion. So the recent performance of stocks during earnings season suggests potential equity buyers are getting exhausted, and the combination of earnings season stock performance and narrowing market breadth, along with a market that needs to now set a new set of catalysts or reassurance about the prevailing market narrative, and finally the momentum also unwinding as well. So this right here, again, some of the reasons why we're starting to see a little bit of a pullback, a potential pullback in the markets for S&P 500, NASDAQ. But again, as I mentioned before, I think it's much better to essentially analyze the risk and reward in the present day, look at the markets today, and kind of base your decisions off of what's happening today. Are the markets buyable, investable today? As opposed to, of course, basing it off of, buyer's momentum, or momentum start to fade and markets could pull back 10-20% and much rather wait. No, so you keep investing, you keep looking at the markets from a very objective standpoint without any biases, and look at the risk reward. Are the markets giving us some discounts? Are the markets giving us some good value based on today? If not, you look for places where there are opportunities, and in the meantime, simply wait, let the prices come to you, be more patient, and when the prices do pull back and sell off and of course come down, that's when we sort of be more aggressive. We are going to be dollar cost averaging and a little bit more heavily investing into the markets as well. So macro data disappoint, and the reemergence, this is another reason why they believe that 10% correction is possible. The reemergence of stagflation or a recessionary narrative would kill hopes of a soft landing in the economy, likely drive stock prices lower as well. So We've got Amazon pushing higher 2%, Tesla's up a little bit over 1.8, Google up 72 basis points, Microsoft up 12 basis points. So a little bit of a sort of mixed market here on the day. So again, this right here is the entire market. Amazon did push higher quite well. Nvidia pulled back. I think PayPal was up very nicely, up over 5% on the day. So basic materials, consumer cyclical, energy, consumer defensives, comm services, all pushing higher, with industrial and utilities selling off. And in the last 1 week, of course, we got technology, healthcare, communication services, defense and real estate all pushing higher, with utilities and energy selling off. And in the last 1 month, we've got technology, comm services, healthcare, defensives all pushing higher, with materials, industrials, and energy rolling over as well. Cocoa prices, lumber prices, orange juice, ethanol all pushing higher, with canola, palladium, feeder cattle, copper, and oats pulling back. Bitcoin now back above $71,000, and Ether also over 3,800 as well. So coming over to the market, and volatility here continues to slide lower back down to 12.5, which again is a really low number and something that we need to consider. We need to continue to be more alert and cautious here with volatility. So inside this red rectangle between 11 and 12, it's going to come down to really low percentiles, and it's going to get to be the extreme rare conditions here where if the VIX spikes, of course, the markets are going to start rolling over. And again, when the VIX is high, it's time to buy. When the VIX is low, it is time to look out below, or time to go is going to continue to hold true because of the inverse correlation between volatility and the market indices. Coming over to Ether and Bitcoin. So Ether consolidating sideways here between 38 to 39,000, 3,800 to 4,000, and Bitcoin here back over 71,000. So pushing higher very nicely, still getting up to that resistance area close to $72,000. So this right here is going to be that level to watch, with the support level sitting roughly at $67,000 for Bitcoin as well. Crude oil prices are bouncing off from this support of $72 a barrel. So this right here, a very, very important level to keep in mind. As a support for crude oil, we're starting to see a little bit of momentum higher, and resistance back up to as much as $81 a barrel. But this pullback is actually good news for inflation, because we are seeing on a month-over-month basis, especially last month, which is exactly the inflation reading that we're going to get. It was down over 5%, right, in the month of May. So that's good, and that could again help with inflation that we're going to get on June 12th as well. Moving over to the 10-year treasuries, so you'll notice that we are starting to see government bonds sitting at just under 4.3%, so a little bit over 14 basis points, so just under 4.3%. At the moment, they're starting to roll over from this highs of 4.7, even recent highs of 4.6. So that, again, is kind of helping the markets push higher. The trouble trifecta, as we like to call it, we've discussed this before. The U.S. 10-year treasuries are one, crude oil prices is second, and the third one is the dollar index. And you'll notice that crude oil prices are back down to these levels, sitting roughly at 4.2, 4.3% for 10-year treasuries as well. So we're seeing a very nice recovery for TMF and TLT, which have been pushing higher for 4 or 5 consecutive days in a row, from lows of $88 back up to over 93, so 5.5% gain. And TMF also here pushing higher very nicely from 44 to as much as $52, a nice 17% gain for TMF as well. Starting with S&P 500, so SPX, we're starting to see a new all-time high again at 53.52. Resistance, well, there's no resistance because we're trading at all-time highs, and support level near term is going to stay put at 53.30, down to as low as 52.65 to as much as 51.87 for S&P, all the way down to 49.55 for the markets as well. Talking about the NASDAQ, so NASDAQ here also hitting new all-time highs. Very nice move to the upside, a bit more on the overbought side. Support level is going to stay put right over here at around 17,000, down to as low as 16,056 for the NASDAQ as well. So those right there are going to be some levels to keep in mind for the NASDAQ also. Pretty much all-time highs at the moment. Talking about Apple. And Apple here starting to roll over a little bit, so down about 71 basis points. So market cap's back under $3 trillion, pretty much trading at this resistance. So we've got this area of rectangle, so inside this red rectangle, so that area of supply and resistance to watch for Apple very closely. Support level inside this green rectangle, sitting roughly between 165 to as much as 175 for Apple here. And this has been an area of consolidation. We're coming back up to its triple top resistance and area of supply for Apple at the moment. Talking about Amazon, Amazon had a very nice recovery back higher. So this right here was the higher low for Apple, and we're starting to see that bounce back higher. Resistance is going to stay put at 188, 189. So this right here is going to be a very important level to keep in mind for Amazon. Support level close to 170 for Amazon as well. So a lot of consolidation sideways in that range for Amazon, and resistance and target's going to be back up to 188, 189 for Amazon as well. Talking a little bit about Tesla, and Tesla here also also pushing higher, slightly up over 1.6%, so not a bad day. Reasonable volume on the day though, and we've got big catalyst coming up for Tesla. Resistance is going to stay put inside this sort of red rectangle. Huge area of supply in the 190s to as much as 200, and Tesla needs to break out over $200 in order for us to see that momentum higher for the company as well. So that right there, huge area of supply and resistance, as we have already discussed, for this company. Nvidia also rolling over, down about 1%. Market cap is again very similar to that of Apple, under $3 trillion again. Very, very overbought RSI and MACD. Of course, we got the stock split coming up on Monday. So that, of course, in itself is going to be a very big catalyst, very big news for Nvidia as well. And we'll see how it trades after the stock split as well. But new all-time highs, very overbought. Valuation is a bit too much as well. So caution is, of course, very, very important. Advanced Micro Devices, 166, consolidation sideways, support level at 161, and resistance as much as 183 for AMD. And we're seeing a lot of consolidation here and massive support area of demand here in the 147, 148 level for Advanced Micro Devices. So that right there is going to be that support level to keep in mind for Advanced Micro Devices. Talking a little bit about PayPal, and PayPal here with a very nice move to the upside, up over 5.5%, breaking back out above at $65, and next target and resistance is going to stay put at $68, $69. So those right there are going to be some levels to keep in mind for PayPal. And again, support level is going to be inside this green rectangle, support all the way down to $57.50 for PayPal as well. So a lot of consolidation sideways and a huge resistance and area of supply here at $68.69 to as much as $70 for PayPal as well. And support level is going to stay put right over here, roughly at $65, $66 for the company. Talking about Visa, and Visa here also recovering very nicely, so pushing back up. So this right here is going to be that support level. So inside this green rectangle, we've got a massive support for Visa. So this right here is going to be that level to keep in mind. Very nice validation of that support, and then of course pushing back up. Resistance and target is going to be back up to $282 per share for Visa as well. So that is going to be that next target and resistance to keep in mind. Talking about Meta platforms, and Meta here on the day continues to rally higher. Had a huge breakout yesterday, up over 3.7%. Next target and resistance is going to stay put roughly between 515 and 531 for Meta, and a massive support here inside this green rectangle for Meta as well. So that right there, a lot of consolidation, and that is going to be inside this green rectangle as an area of support for Meta as well. Talking about Netflix, and Netflix here also just consolidating sideways in that range. It hasn't really moved higher above 657 or broken below 628. So that right there is about a $40, $50 range within which it's just been trading, and the support level is going to stay put at 636 for Netflix. It is near overbought levels here. So all three, RSI, MACD, and the L3 banker oscillator, suggesting for overbought conditions, and support level is going to stay put down at sub $600 for Netflix as well. Talking about Google, and Google here also pushing up over 72 basis points, so just over 178. Again, pretty much trading at all-time highs here for Google as well. So we'll continue to monitor how it trades in the coming weeks and of course months, considering that we've got a lot of inflation data, economic reports, FOMC, everything's going to be scheduled in the coming months. And Google here, of course, support level is going to stay put at 174, 173, down to as low as a much stronger area of support here inside this green rectangle in the 150s for Google as well. And finally, we come over to Microsoft and Enphase, and Microsoft here basically flat. Support level is going to stay put down at 417, and a huge resistance up to 431 for Microsoft, and a much stronger area of demand and support here inside this green rectangle, sitting roughly at 396 down to $400 for Microsoft as well. Finally, we come over to Enphase. Enphase here still got a double top, triple top resistance sitting at 138, very similar to PayPal. So both PayPal and Enphase need to break out over 138 in order for us to see more upside and more potential for those companies. So this right here is going to be a huge resistance at 138 for Enphase, and support level inside this green rectangle, sitting roughly around low 100s for Enphase as well. And finally, we come over to Costco with, again, yet another new all-time high. Absolutely incredible momentum, overbought RSI, MACD, and of course the L3 banker oscillator, but up another 1%, $842. And this stock just slowly and steadily, it's kind of like the turtle in the race. It just keeps pushing higher and higher to new all-time highs. So absolutely massive momentum coming in for Costco. And just take a look at this rally. I mean, it's gone from $700 to well over $840, so almost a 20% gain in a very, very short period of time, in just about a couple months here for Costco. So massive move to the upside. Overall, we've got big inflation numbers scheduled for June 12th, along with the FOMC meeting and the summary of economic projections. Tomorrow, we've got unemployment numbers, ECP with the first next rate cut. So lots of volatility expected in the markets with Tesla's shareholder meeting also scheduled for next week as well. So hope you all enjoyed this video and found it helpful. Make sure you drop a like and don't forget to subscribe to the channel. And again, links to our Discord and Patreon is going to be down below if you want to join. Get access to the entire beta launch for the MoneyVest platform, 51% discount right now. And again, you can lock this pricing in forever. So links going to be down below. We'd love to have you on board with limited spots. I think 4 spots left and for a limited time as well. So always happy investing. I'll see you all in the next video.